In this lesson, we're going to explore one of the most important concepts in smart money trading, buy-side liquidity. Many retail traders believe markets move randomly, but institutions operate differently. Large players such as banks and hedge funds require liquidity to enter and exit positions efficiently. One of their favorite targets is the liquidity resting above swing highs and equal highs. This is where the stop losses of sellers and breakout traders are often located. Institutions don't simply chase price, they hunt liquidity. Understanding where liquidity sits can help you anticipate market moves instead of reacting to them. In this lesson, we'll uncover how buy-side liquidity forms, how liquidity sweeps occur, and how you can use this knowledge to trade with institutional logic. Let's dive in. In smart money concepts, one of the most important ideas to understand is buy-side liquidity. Buy-side liquidity refers to the pool of stop losses and pending buy orders that rest above swing highs, equal highs, and resistance levels. Institutions such as banks and hedge funds require liquidity to execute large positions. They don't randomly enter trades, they seek areas where many orders are concentrated. Notice how price often breaks above equal highs, triggering the stop losses of sellers and activating breakout traders. This event is known as a liquidity sweep. Once sufficient liquidity is collected, institutions frequently reverse the market in their intended direction. Remember, markets move from liquidity to liquidity. By identifying where liquidity rests, traders can stop chasing price and start thinking like institutions. Follow liquidity, not opinions, and trade with confidence. Now that we understand what buy-side liquidity is, let's dive deeper into where it forms and how institutions hunt it in real market conditions. Liquidity exists where retail traders place their orders and stop losses. In smart money concepts, institutions don't chase price, they hunt liquidity. One common example is stop losses placed above equal highs. When price sweeps these highs, sellers are stopped out and liquidity is collected before the market often reverses lower. Similarly, stop losses below equal lows create sell-side liquidity. Institutions may push price below these lows, trigger stops, and then reverse the market upward. Buy stop orders above resistance and sell stop orders below support also create liquidity pools that attract price. Remember, markets move from liquidity to liquidity. The key is not to become the liquidity, but to identify it, understand it, and trade alongside institutional flows. Now that we've seen where liquidity exists, let's explore how institutions deliberately hunt these liquidity pools to enter and exit massive positions. One of the biggest secrets in trading is that institutions don't chase price, they chase liquidity. Liquidity is the fuel that drives the markets because banks and hedge funds need large amounts of orders to enter and exit positions efficiently. This is why price often moves toward areas where stop losses and pending orders are clustered. Institutions first identify liquidity pools above highs, below lows, and around key support and resistance levels. They then push price into these areas, triggering stop losses and activating pending orders. Once enough liquidity is collected, institutions enter their true positions and move the market in their intended direction. Remember, retail traders often provide the liquidity while smart money uses it. The market is not random, it moves from liquidity to liquidity. If you want to trade like institutions, stop asking where price will go next and start asking, where is the liquidity? Follow liquidity, not opinions. Trading is more than charts. It's about learning, growing, and staying connected with a community of like-minded traders. Join the Trading Smart community to receive market insights, educational content, and institutional trading knowledge designed to help you trade with confidence. Follow our Telegram channel for trade signals, market updates, and trading discussions. Join our WhatsApp community for quick updates and support. Connect with us on Facebook for trading education and market insights, and follow us on Instagram for charts, setups, and daily motivation. Most importantly, subscribe to the Trading Smart YouTube channel for smart money concepts, institutional trading strategies, live trading insights, and in-depth educational videos. Remember, success in trading is not a destination. It's a journey of continuous learning and discipline. Stay connected, keep learning, and let's trade smarter together. Trade with intelligence, win with discipline. See you in the next episode.